Uh, Good afternoon and warm welcome to all respected dignitaries, esteemed professionals, members, and participants joining us today for this highly practical and timely webinar on GST Helpdesk Navigating Scrutiny. There is a famous quote by Dr. APJ Abdul Kalam: excellence happens not by accident, it is a process. And in GST practice today, scrutiny preparedness is exactly that, a process of proper compliance, timely reconciliation, practical interpretation, and professional awareness. Over the years, GST has evolved from being merely a tax law into a highly technology driven compliance ecosystem where notices, mismatches, data analytics, AI based validations, and scrutiny mechanisms have become a regular part of professional practice. Today, professionals are not only expected to file returns, they are expected to anticipate scrutiny before scrutiny actually arrives. And therefore, today's webinar is not just theoretical discussion, it is designed as a real life GST help desk session where practical issues faced by professionals will be discussed directly by our esteemed experts. I am CS Sapna Dilip Lunawat and I feel privileged to be the moderator for today's session. We are delighted to have participants joining from across the country. Before we proceed, let me inform all the participants that you may keep posting your questions in the question box. We will try to cover as many practical aspects as possible during this discussion. Swami Vivekanand has rightly said, take up one idea, make that one idea your life. And today, our one idea is understanding GST scrutiny practically and confidently. So let us begin this insightful journey together. To commence today's session, it is my privilege to invite a respected leader of a profession. A true leader not only guides institutions, he guides professionals towards preparedness and excellence. With great respect, I invite CA Rajendra Kumar P, the Vice Chairman of GST and Indirect Taxes Committee of ICI, to deliver the opening remarks. Sir has consistently contributed towards strengthening practical GST awareness among members and professionals. Sir, we look forward to your valuable guidance. The virtual platform is yours, sir.
Thank you very much, CA Sapna Lunawat. I appreciate that at a very young age, you have the required amount of boldness as well as speaking abilities so that it takes you to longer distances in the future.
Thank you.
Our very esteemed chairman of the GST and Indirect Taxes Committee, our AI man of ICAI, CA Umesh Sharma ji, very senior chartered accountant and next subject expert, CA Shankar Narayanan, my good friend, CA Omkar Gadgil, who is also one of the speakers for today's program. Very esteemed friends, it is my proud privilege to welcome our Honorable Chairman of the GST and Indirect Taxes Committee, who is basically a person who is deep rooted in the subject of indirect taxes, especially GST. I need not tell much about him because the world knows about him. But as an individual who has moved with him, as an individual who likes to be with him, as an individual who is an admirer of his in-depth skills of oratory as well as writing abilities, I must say CA Umesh Sharma brings to the table the wisdom of the old and exuberance of youth in the council table. A person who has created record in writing newspapers, a person who is more attached to the profession and a person who is a family man, basically. He loves his parents, his son, his daughter. In fact, everyone loves, isn't it? You would say, what is big about it? Everyone loves their parents. But then he is devotion. He is devoted. Being in love is different, but being devoted in love is very different. So he is devoted in love. I've observed that. I've seen that I watched it very closely. See, certain things are there where today, if you talk about a leader, people say, what is this? He is praising him, he is praising. No. You must know who the person is. Otherwise, how will we know? Simply, is it that Umesh Sharma had no other job that he contested election and we won the ICA election? Is it that he has no practice? Is it that he has no office? Is it that his family is in dire strait that he needs to contest an election? No, my dear friends. He was born with a silver spoon. A person who has an excellent practice, his father himself is a chartered accountant, an excellent chartered accountant with more than one offices in the state of Maharashtra. A well-to-do person, wonderful bungalow he has. He could have led the life like a prince. But he is here in the institute, serving the institute. And real service that he delivers to the institute. I may talk about him long time. For hours I can speak about him. But then I must tell you, friends, a true person, a true leader, a person who serves the society without fear or favor, having come from a family which is affluent. May not be for generations, but then yes. And then you see this person called Shankar Narayanan V seated there. I have seen him as a student. And today he has gained a very high expertise in the subject. You'll observe him. Many of you, if you have heard him speak, you know the kind of depth he brings in the subject, the kind of depth. I can proudly call him my boy. I can proudly call him. He will agree also. And we say, if you ask me to speak in Hindi, हमारी उंगली पकड़ के बड़ा हुआ है. He has held my finger and he has grown. That much I can tell about Shankar Narayan. I am very happy about it. Omkar Gadgil ji, Umesh Sharma has selected. That means you also have a great merit. You have long innings to play in the institute and you will also be extremely successful. Friends, this committee is your committee. GST, today if a chartered accountant is not doing GST means it is akin to a person who does not own a mobile phone. बड़ा आदमी है भाई, उसके पास मोबाइल नहीं है. Big man, he doesn't have a mobile. Big man boss is not doing GST. Or he cannot afford mobile phone. He cannot afford practice. So either way. So GST and CA are one and are like the back of the hand or palm of your hand. And this committee, especially under leadership of Umesh Sharma, is hindering yeoman service. As a vice chairman, I am proud that I am his vice chairman. After 3 years of laying down the office, even if I assume higher offices, I will always consider myself proud that I was the vice chairman of Umesh Sharma. I was also his chairman. He was vice chairman. I was his chairman. But I wanted to become his vice chairman. And hence, here I am before you. I have taken much of your time. I know some of you will be irritated what this fellow is talking, only praising everyone. It is required, my friends. Unless until seniors like me tell something good about others, only then you will know. Otherwise, why this moderator Sapna Luna is sitting here? What she can very well do her office practice and all. In the afternoon time, she can sleep also if luxury is there. But she is interested in ICI. She wants to come spend time here. And majority of you who are come here for the subject, welcome to all of you. Over to you, Sapna, for further proceedings.
Thank you, sir. Thank you very much, sir, for these inspiring remarks. So this has set a perfect tone for today's session. Sir, moving forward, it gives me immense pleasure to invite the chairman of GST and Indirect Taxes Committee of ICI, C. Umesh Sharma, one of the most respected voices in taxation, education, and professional development. Under his leadership, the committee has continuously organized initiatives that help professionals remain updated, informed, and future ready. He is a renowned speaker, author, a mentor to thousands of chartered accountants across the country. He is the author of the popular Karniti series inspired by Lord Krishna and Arjun and is widely known for explaining complex tax laws in a simple and practical way. Because of his wisdom and guidance, many professionals fondly call him the Shri Krishna of a profession. With great respect, I request C. Umesh Sharma, the chairman of GST and Indirect Taxes Committee, to kindly deliver the welcome address. So, may I
Thank you.
request you to kindly address the participants?
Thank you, Sapna, for your kind words. And she is very known to me, so she speaks high about me. But I am the student of GST, and as you all know, we all are a student of GST. And our Guruji, our sir, is sitting there, Rajendra Kumar P. Sir, who is our teacher in this GST era. And I also held his hand, his fingers, and I am walking with him in council. So, sir, I have also held your fingers, the another hand fingers. One is held by Narayan sir, then another is held by me. So, thank you, our passionate chairman. I never tell him vice chairman because he is a passionate chairman of our GST and Indirect Tax Committee, and his guidance is always there. And we all know how passionate sir is, and under his leadership, we are all growing together. Friends, as you have known, that leadership means not independence, it is interdependence. And if you want to gain a leadership in GST, you have to depend upon somebody of your senior or on your colleagues or on your juniors also. And when interdependency comes, it is very important that you help someone or someone helps you. So that's why we have help desk today. RK sir helped me, I am helping Sapna, and participants are there. And for their help, we have our faculties, Shankar Narayan sir and Ankur Gadil. So it's all ecosystem of helping each other. So we are interdependent, and we are starting and we are delivering today one of the important topic of scrutiny help desk. And one more important thing for all the participants, the views expressed by the faculties, the views expressed on this forum should be taken after due diligence of your respected facts, figures, acts, rules, regulations. ICI just giving you a guidance through this help desk. So we have scrutiny as a subject, and as pointed out by RK sir, we are moving across India with the different subject, and this year we are more focusing on the GSTAT. We have met President Justice Sanjay Mishra ji, and we had a good discussion. RK sir and myself have hosted at 2 outreach program to them, and we are reaching out to each and every branches for that outreach program as well as for the GST art, that is GST adjudication representation in tribunal. So request you all that you face scrutiny, no problem. If you don't face scrutiny, then there cannot be appeal. If there is appeal, don't problem, no problem. Even if there is a merit, you will go to tribunal. And if you are in tribunal, no problem. We are also there in tribunal. So at all level, ICI is there with you. And after tribunal, representation of a chartered accountants get stopped, and then at the High Court and Supreme Court, other professionals will take up. So till tribunal, we have to be together. So GST, ICI, and a CA will stay together. So let's start our discussion with today's webinar. Thank you all of you for joining. Thank you RK sir. Thank you Sapna. Thank you Shankaranji and Gadgilji. Over to you, Sapna.
Yes, thank you, sir. Thank you so much for your warm and encouraging words. Sir, as Chanakya has said, a true mentor shows the path even in the most complex situations. Sir, for many of us, you have truly been that guidance force, and your commitment to knowledge sharing, and professional development continues to inspire professionals across the country, sir. Now we move on to the most exciting and practical segment of our today's webinar, the GST Helpdesk panel discussion. And I must say, today's session is extremely special because the queries received are real-life practical situations faced by professionals during scrutiny, assessments, reconciliations, portal challenges, and departmental proceedings. And to decode these issues, we have with us two highly experienced experts. Our first esteemed panelist, CA Shankara Narayanan V, is a distinguished chartered accountant and a cost and management accountant with rich experience in indirect taxation, GST, customs, and foreign trade policy. He is a GST master trainer affiliated with ICI, a member of various prestigious indirect taxes committees holding authoritative positions, and has trained more than 19,000 professionals across India on GST law and practice. CA Shankar sir has authored and reviewed publications on SENVAT and GST under the auspices of ICI. As Chanakya wisely said, before you start some work, always ask yourself three questions. Why I am doing it, what the results might be, and will it be successful? And I think scrutiny handling under GST requires exactly this mindset. We are honored to have you with us for this discussion today, sir. Our second panelist, CA Omkar Gargi sir. He is a fellow member of ICI with over 12 years of experience in the field of indirect taxes, specializing in GST advisory and litigation across sectors including manufacturing, pharmaceuticals, hospitals, IT services, and aviation sector. Sir has qualified chartered accountancy and holds a postgraduate degree in commerce. He is also a certified expert in indirect taxes from ICI and has been a national level faculty contributor for ICAI's Indirect Tax Committee. CA Omkar sir has delivered more than 125 seminars on GST and indirect taxes at various ICI forums and is the author of the book GST Concepts to the Core. He currently serves as the committee member of Thane branch of WRC of ICI for the term 2025 to 29 and has held the position of branch chairman for the year 25-26. There is a beautiful quote by Ratan Tata. Power and wealth are not two of my main stakes. Similarly, true professionals are remembered not merely for technical knowledge, but for clarity, ethics, and practical guidance. With this, a very warm welcome to you as well, sir. So, with this, let us dive straight into today's GST help desk discussion. Let us begin with the first query. Before that, just a small disclaimer that the views that these are purely the views of our speakers, and they are not the views of ICI. So, sir, our first question received from our audience is, sir, can you see the screen?
No, madam. No, Swapna, as of now.
Sir, now?
Yes, now we can.
Okay. So, yes. Sir, our first query is to Shankar, sir. Sir, our first query relates to the delayed payment of customs, IGST, and subsequent ITC eligibility. The participant asks whether IGST pertaining to financial year 2021 is paid in financial year 26-27 pursuant to a customs demand notice along with interest and penalty. Whether such IGST would be eligible as ITC in financial year 26-27, even though it is not reflected in GSTR 2B of financial year 26-27. So this is a very practical issue because many taxpayers face demands during scrutiny and later struggle regarding ITC eligibility. Could you please guide us, sir, on this legal as well as practical position here? Over to you, sir.
Yes, ma'am. The first thing here is with respect to the input tax credit eligibility on the amount which is paid as IGST, but not during the original assessment. It has been paid subsequently. So original bill of entry would not contain this IGST. It has been paid subsequently. So that is the scenario that we are looking at. So when it is paid subsequently, typically we call it as TR6 challan. That is how it will be paid to the customs. So through that, whatever payment is made, can it be availed as ITC? Is a burning issue. As you rightly said, many of us end up in the other side where we pay the tax and we assume that, okay, fine, anyway, customs duty is assessed on a higher side. Even if there is going to be a change only in customs duty, my IGST also increases because the taxable value under 3 subsection 7 of the Customs Tariff Act for the purpose of identifying the IGST liability includes customs duty. So even though 18% goods in IGST has been taxed at 18% in the IGST in customs, but just because customs duty increases, IGST also increases. But practically, there is a circular that is given by the Customs Department, June 2023. That is when they had given a circular stating that such ITC can be availed only if the shipping bill has been revised. Now, there are two ways to look at it. One, it is only a circular. It is not the law. And do I have a provision within the GST law to avail this ITC? I would take refuge under Rule 36, Sub-Rule 1 of the CGST rules, which talks about what are all the documents based upon which I can avail ITC, where it would say bill of entry or any such document by the customs. So based on that, I should be able to avail. So logically speaking, and looking at the rule in silo, we will feel that we are entitled to take input tax credit. But on the other hand, the 2023 June circular by the customs specifically says no such ITC will be allowed based upon the payment challans. You should have reassessed your bill of entry, and through that only this ITC could be availed. And in customs, there is an innate provision that beyond 1 year from the date of bill of entry, there is no possibility to reassess that bill of entry. So it is like we are in a situation where if it is done, we will be eligible for ITC, but that cannot be done. So hence, I feel if you are okay to forgo the credit, it is better to forgo, book it as expense. Else, you are in for a litigation because the stand of the department is already clear in terms of their circular. So that any deviation from that will only be challenged by the department.
Okay. Yes. Thank you, sir.
Sapna,
Yes.
may I add a point? Shankar
Yes.
sir, with your permission, can I just add a point on this question?
Please,
Yes.
please.
Yes. So at the outset, thank you Indirect Tax Committee, Umesh Sharma sir and RK sir for this invite, and also thank you Sapna for your efforts. So friends, I just wanted to add a point regarding this particular question. So yes, as very rightly mentioned by Shankar sir, I will not repeat anything of it. The only thing where practically we are facing this issue, and because there was one aspect was also mentioned, now we have paid the amount along with interest and penalty. So I just wanted to highlight something on the interest and penalty quotient, that practically what has happened is that the customs department has not been able to give us the self-assessed or reassessed bill of entries. Beg your pardon, reassessed bill of entries have not been obtained. And therefore, the only thing that was given was a calculation paper on which the amount of IGST was specified, and the amount was asked to be paid along with interest, and that simple challan was created on the IceGate portal. The thing is that, as very rightly mentioned, the circular strictly requires that we should have a revised bill of entry. However, in few of the cases where we are having this problem, we have already proceeded with claiming the credit. And of course, as sir very rightly mentioned, it is under litigation because there is no other way since the department is not going to allow it. That is one. Now, as far as only the interest and penalty portion are concerned, we have tried to take a shield on this basis because there are two ongoing there are two ongoing legal matters which are there before the Supreme Court right now, but one of them which was confirmed by the Honorable Bombay High Court in case of AR sulfonates, wherein the imposition of interest on the portion of IGST prior to August 2024, when the amendment under 3 subsection 12 of Custom Tariff Act was made, that levy of interest was considered to be in doubt in case of Mahindra and Mahindra, followed by an AR sulfonate by the Honorable Bombay High Court. So taking the recourse of both these judgments, we have tried to not pay that and try to litigate this matter, and this is what can be additionally also done. So if at all, I'm going above the overboard a bit, that if at all you've also ended up paying, then maybe might as well go and file for a refund application and go into the litigation zone as far as the refund portion of interest is concerned or the penalty is concerned. So right now I'm restricting it only to interest. Just these were the additional point relating to this question I wanted to add. Yes, we can pass it on. Thank you.
Oh, yes. Thank you, sir. Thank you so much. In GST scrutiny too, proper documentation and transparent compliance ultimately become the strongest defense. That is what I understand, sir. So now moving to another highly debated issue relating to RCM on renting transactions. So this question to Omkar sir. Sir, this question concerns the amended RCM provisions applicable to renting of commercial property. This is regarding the notification number 92024 CT dated 8th October 2024. So the participant wishes to understand where an unregistered landlord earns rental income exceeding rupees 20 lakhs along with trading turnover of rupees 25 lakhs and interest income of rupees 1 lakh, whether GST registration becomes mandatory for landlord or whether RCM would continue to apply. Sir, again, this issue is creating considerable confusion among taxpayers and professionals alike. So, sir, could you please throw some practical light on this matter? Kadvir, sir.
So see, primarily when there is a compulsive reverse charge mechanism which gets applied under 9 subsection 3 or 9 subsection 4. Now, firstly, when we are talking about this particular insertion by notification 9 by 2024, primarily what the notification states is that if you are claiming, if you are taking any immobile property on rent, other than a residential dwelling, that is a commercial property, and if such property is taken from an unregistered owner or unregistered landlord, then the recipient is liable to pay tax under the reverse charge mechanism. So to read it very plainly, what is the fact that the presupposition has been given is that if the immobile property belongs to a taxpayer who is an unregistered taxpayer, and if it is taken by a registered taxpayer, the registered taxpayer is liable to pay GST under reverse charge. So as on today, whatever facts are known to you that your supplier or the owner is unregistered. Now it is the second scenario that practically he gets squarely covered under the definition of person or a taxable person or a person liable to get registered under section 22 because his aggregate turnover is exceeding 20 lakh rupees. However, till the time if he does not get registered or obtains not to take a registration at all in any case, the recipient would continue to remain liable to pay the tax because the fact of the transaction remains is that he is claiming he is taking the property on rent from an unregistered person. So regardless of the fact that the supplier is actually a defaulter in the eyes of GST law, he is supposed to get registered but he is not registering, that does not naturally absolve the department from taking liability from the recipient in such case, especially when he is not taken any registration, or at least till the time he is not taking the registration. Let's just to tweak it further, if let's suppose that going forward he does obtain a registration, and once he is obtaining the registration, thereafter of course the natural shift will happen because then this notification of reverse charge will not become applicable to the recipient anymore. So as of now, this would be the answer. Yes. Shankar sir, any other views or we can move?
Absolutely. There are two issues that I would just want to add to this, which we are still trying to come into terms with. One is, if I am getting covered under section 23, the proviso, which clearly says that when the liability to pay the tax on my transaction lies with the other person, and the other transaction, that is I don't have any other liability apart from that, section 22 or 24 does not apply to me. 23 will override that. So in this case, that is what some of the landlords are contesting. They are saying that, see, even if it is more than 25 lakhs, that is more than 20 lakhs, I should say, I'm not duty bound to get registered, because since you are paying RCM, the day you stop paying RCM, maybe I'll become liable. I'm getting covered under Section 23. So I'm not sure whether that is how we have to interpret Section 23. I'm hoping that any other taxable income other than renting comes into picture, then the liability will squarely sit on them, not with respect to this. So they will still be able to get away, is my first point. The second interesting scenario which we felt was, a person is registered in Tamil Nadu. He has a property in Karnataka. Now they have taken a stand that the property in Karnataka, they will give an invoice from Tamil Nadu. They will not get registered in Tamil Nadu because it is only a property which is located there. So they were giving IGST invoices. Now the Karnataka officers are saying, you cannot get IGST invoices from outside. For the purpose of Karnataka GST, we will assume this person to be a unregistered person. So you will have to pay RCM. Though the transaction has already been subjected to tax, invoice has been given from Tamil Nadu to Karnataka. Still, the department is arguing that from the perspective of the definition of registered person, it should be in the respective law. So in the SGST of Karnataka, he is not registered. So I will not treat him as a registered person. But this, I think, will create a furor in the days to come.
So, Shankar sir, just to add this thing on this registration, what you mentioned, that the problem lies in the definition of the problem lies in the definition of Section 22, which is person liable to get registered. Not definition, beg your pardon. I say the provision of registration. The CGST Act provision says that a person will be liable to register from where he makes a taxable supply. Whereas in some of the state laws, it has been mentioned that a person should be liable to registration in the state where he makes a supply. And when the SGST law specifically is saying that it is in the state, and from CGST law it is saying from where he is making a supply, that is where this primary confusion has started emerging. That is one. And as you rightly mentioned, that people are doing this registration and charging IGST for properties located in another states. That also has a precedence only taken from the FAQs which was issued by CBIC in the very earlier days.
Yes.
And now now people are including me and my client, that we are taking the same CBIC FAQs to the department saying that, boss, this is what you have only clarified. So whether this holds up or not, it is not new. Yes, we can move further.
Yes. Thank you, sir. Sir, very practically and beautifully explained by both of you. So I think one of the biggest challenges under GST today is not lack of provisions, but interpretation and implementation. And that is why discussions like these become extremely valuable for our professionals. So now let us move to our another important area of ISD turnover computation and ITC distribution. Shankar sir, so this question is, the next query relates to turnover computation for ISD distribution. The participant seeks guidance on whether turnover should be considered as per GSTR 1 or 3B, excluding advances or including advances, or as per books, including exempt interest income. Sir, ISD provisions are now becoming a major scrutiny area. What practical approach should professionals ideally follow here?
Okay. I see the option 1 and 2 are mutually exclusive, whereas option 3 could be a separate question altogether. So looking at it from that perspective, advances received, we are forced to pay GST on that only because of time of supply provision, which is 13 subsection 2 of the CGST Act. So it is not a supply per se. It is only the time of supply occurs. So I am paying. What if the advance is refunded? I cannot take back a supply. So that is why when I refund the advance, I raise a refund voucher and reverse the tax what I have already paid. So that way it is not within the purview of supply at all. Hence, excluding advances should be the appropriate way to define the turnover, which is reported in GSTR 1 and 3B. Blindly taking GSTR 1 and 3B turnover is not correct. When it comes to option 3, the question there, I see it as the fixed deposit interest. Should I be considering it? Because that is considered in my P&L, but that is not reported on a monthly basis in my GST returns. If that is the case, very technically looking at this transaction, I am personally of the view that it must be reported on a monthly basis. See, there are certain things which need to be done, but which may not be done. So it will come under that category. It is like exercising every day is good for health. We all know, but will we be able to do? That is the question. So same way, I should report all my exempted turnover on a monthly basis. Yes, I know. Will I be able to do is a question that you can ask yourself. But this will only make it as an exempted turnover part. And this exempted turnover, whichever gets added, is also not going to result in any ITC reversal. Courtesy Rule 42 and 43, the explanations which follow that. Should I take it into account? Yes, you should. Had you reported it in the GST return, you must report it in the GST return and take it from there. When you have not reported it in the GST return, it is only appearing in the P&L. Should I still take it? My answer is no on a monthly basis. But please remember, Rule 42, 43 is always not going to be applicable for this reversal. Hence, this distribution will never get distorted by not taking this into consideration.
Okay. Yes, sir. Sir, Omkar sir, would you like to add something?
No, not necessarily. The only thing in the option 3 where it mentions which include FDR on interest on FDR was not reported. So, see, technically, anyways, this fixed deposit receipts is not going to be a state specific income. It is an income of the entity. So, the ISD distribution per se is not going to make a huge impact on considering the turnover, I mean, FD turnover as a part of it or not. That is my one humble submission. And as far as the second aspect is concerned, prima facie, when you do this distribution on some logical equitable basis, that of course turnover will always be the highest counted one. However, in the absence, I mean, if in case of certain services, it is not necessarily on the turnover also. So as long as you're in a, so for let's say that there are certain services, I am having registration in 10 states, but there are only 5 of the states for which I am taking a particular input service. Then there the distribution, what I'm going to do is maybe on the basis of consumption, the quantum of consumption. This is more like a fallback option when it goes to the turnover based distribution, when it is going to happen eventually for the amount at large. So that is where I believe that there is some liberty also that the taxpayer can really take, as long as he is able to defend the consumption. The ultimate aim would be the destination based consumption tax, the quantum of exemption, the quantum of consumption, beg your pardon, where it happens in a particular states. So that is where the emphasis lies as far as the distribution would be concerned. In fact, you would be seeing that there are some notices nowadays issued from the department where the notice is on the count that you have received X amount of ITC in a particular state. However, the distribution is not that much as it should be. And here you have tried to consume more input tax credit in one particular state because you are having a higher tax liability. So there are even counter allegations of this nature coming up, that regardless of the fact that you're doing ISD distribution, you're doing turnover based distribution or whatever, the quantum consumption distribution is still a thing which is also coming under the scrutiny. Because in one particular state, if you are going to avail more of the credit, and in another particular state for the same distribution, if you are having some difference, as a taxpayer, if I'm able to justify, there is no problem. But even the other side of it is getting challenged now. So this, to the conscience of the taxpayer, should be in his own understanding to be done in the most appropriate way, in my humble view. That is first thing. And of course, one of the option that has to be resorted to. See, ultimately what happens is that when we talk from an interpretation perspective, that is one angle. But when the person who is doing the compliance, he doesn't really have a time that he calls up and says that, okay, what we are supposed to do. This is more like a policy decision that you take once for a period of maybe 1 year or so. So this is just my additional point on this.
Wonderful, wonderful clarity, sir. Both of you beautifully simplified the query, sir. Sir, our next query, let's take a next query. Sir, this is to Omkar, sir. Sir, the participant asks whether there is any time limit such as 30th September or 30th November of the subsequent financial year for adjustment of negative liability in GSTR 3B. So could you help participants understand the procedural position here?
So I just want to first give a disclaimer out over here that there are there are a few sides about which in GST I avoid making some comments or making some views. That is, one is about the compliance side of it, because I'm least using the return filing. All the more as much as I know what my team does, there is no limit per se for adjusting or doing any knocking off of this. But still, I would only limit my answer to this point, that there is no limit for adjusting it. Even you can take up view from Shankar sir if there is anything that I am misplacing or otherwise.
Yes, sir. There is only one place where there is a legal mention about it, which is section 39, subsection 9, which talks about any adjustment to the returns, read with circular number 26, which was given in 2017 December. So these two, a combined reading of it will tell that you can make an adjustment for a financial year up until we file any return on or before 30th November of the following financial year. So generally what we will be tempted to think is October's return. If a person is filing normally, maybe a person is filing March month return only on 30th of November, then it is March month return. That's all. So within that return, the corrections can be made. And anything remaining unadjusted or adjustable beyond that period, we are of the view that that can only be claimed as a refund. It as an excess payment of tax. So I feel there is a restriction in 39(9).
Okay. Okay, sir. Yes, yes, yes. Yes, sir. Thank you, sir. That was a very important clarification because, sir, return adjustments and portal reporting are becoming major scrutiny points today. So let us move to our next question. Yes. So, sir, let us move to this question. This query concerns negative balance appearing in the RCM ledger maintained on the GST portal due to payment through DRC03 and simultaneous ITC claim. The participant wants to understand the possible consequences of such negative balances. Yes, sir. So portal-related discrepancies today are becoming common triggers for departmental scrutiny. So what practical guidance would you like to give on this issue, sir? Shankar, sir.
Yeah, absolutely. Portal-related things, and especially portal-related non-law mandated things instituted inside the portal is resulting in notices. So in this case, the first thing I would say is there will be a notice. So get ready. But you will be able to eventually tide over that notice by saying that I am expected to pay the tax. The voluntary payment of tax could have happened through my GST return, which is filed under section 39, or it could have happened even through the DRC03, which is the only other option available for me to make the payment of voluntary taxes. So that way it can be defended. But to get away from the notices, what is the best practice? Disclose your RCM only in the returns. The liability in 3.1D of GSTR 3B, the corresponding ITC availed in table 4A2 or 4A3 as per the nature, import of services or other RCM in GSTR 3B table 4. Now in this, why would somebody pay under DRC03? I can empathize with that. For instance, this month 20th, this is an ideal date for discussion. April, I have to pay some royalty to my foreign holding company. This royalty, I have made the provision, I am going to pay, but we missed to report that RCM and make the payment in GSTR 3B in 20th of this month. So if I have to take it in the return only, then I will have to wait until next month 20th. By the time only I can disclose it again as a liability and make the payment, where I will be incurring 1 month interest. Why should I do that? Can I not pay it under DRC03? The answer is a resounding yes, we can pay. Only thing is, once you pay through DRC03, please ensure to give a letter in writing to the jurisdictional officer that this has been paid towards a self-assessed liability, which is on account of RCM, for which I will be availing ITC in the GSTR 3B. Because for availing ITC, there is only one mode in the GST portal, which is 3B. So I'll be availing an ITC. It will result in a negative balance, but there is no leakage of revenue. This letter may be submitted along with the DRC03 copy, so that when this DRC03 is acknowledged by the officer, by DRC04, and it will be offset and recognized as a government revenue, that time he will be able to create a demand or offset against the demand, which we are highlighting to them. So that would be the best practice. Is negative wrong in RCM ledger? Generally wrong, but the example that you have given here or the situation that you have given here, even if it results in negative, have the proper communication with the officer to ensure that it doesn't blow out into a liability again.
Okay. Sir, Omkar, sir, would you like to add something? If
No,
there
I
is?
think we can proceed with it.
Yeah. So thank you so much. That was a beautiful takeaway, sir. So next question to Gadgil, sir. Sir, this issue relates to cancellation of GST registration. The taxpayer had applied for cancellation due to turnover falling below threshold limits, but after suspension period, the application was rejected. The concern now is regarding GST implications during the suspended period, despite turnover remaining below 20 lakhs. So, how should professionals practically handle such situations?
Oh, so as I understand that he had applied for an cancellation in April 24 because of the turnover which was going below 20 lakhs, correct?
Yeah. Yeah.
All right. And in April 26, notice for clarification was issued in respect of the above cancellation. So, see, of course, there are two things now. If you applied for a cancellation and if the cancellation is yet to be received, then technically you stand as a registered taxpayer till your registration is officially cancelled. So primarily my first view in this regard is that if you have stopped collecting GST, assuming yourselves to be unregistered, then that is something which ideally shouldn't have been done. Because till the time your registration is officially cancelled, just because of the turnover criteria, can you really be moving out of that? That is something which I would say that shouldn't have been done. So here, if I understand correctly, that the officer has rejected the application. So if there is a period of 2 long years in between this, so one is that in the registration provisions also and in the cancellation of registration provisions also, there are criteria to reply and respond to the notices which are issued or on the applications of cancellation. And there are also certain scenarios of when you say that if there is no response to your cancellation application, then deemed cancellation may also end up happening. So in that sequence, because of the lack of absence of fact, I'm just trying to put up that if the particular timeline is getting ticked and if your application for cancellation is not receiving any response as such, only on the portal as long as it is existing, then what I would only suggest is that since you are if you are not officially registered at that point in time, you couldn't have collected the GST and not paid. If you are collecting GST, then of course pay that and file the returns till the time the cancellation officially happens. Only if the application is suffering from non-response from the department or non-response from the office, then might as well, if that particular deemed timeline for cancellation, I'm not able to exactly find out, but I just get up to you that there is something which is mentioned for non-response to the application filed. In that particular case, the liability would cease to exist for on the taxpayer per se. But yes, the 2 years wait is something which is which may not really be in favor of the taxpayer as well, because that is too long a period to wait for getting some response or having some update on the application for cancellation. So here I would only suggest that if there is only if there is only any tax collected during that period by the taxpayer from the customer, let that be paid. If there is no tax collected and if the application can be endorsed that it was cancelled, then he would be fighting. Ideally, he should be fighting from stating that I had all reasons to cancel the registration and I had all reasons to not be continued to be compulsorily a taxpayer by the virtues of provision of section 22-24 either. Then in that case, he may be absolved from the liabilities. But it is not a very easy to go kind of a case. Yes, Shankar sir, over to you.
Yes.
Yeah,
Shankar.
only one more point I want to add here. I think first 2 years of GST, this cover was not there. Post that, what happened? The moment I apply for cancellation, my registration got suspended. So that way, during the suspended period, as Omkar has rightly said, if I had collected tax, as per the provisions of section 76, I am duty bound to make the payment to the government. If that is not the case, we can stay away from the liability, and maybe once the rejection happens, immediately reapply for cancellation, but it will not allow you to quote a date beyond 30 days. So quote that date, which is the earliest that is possible, or if it is covering, let's say it is getting rejected on a Monday, you apply on Wednesday, put Monday as the date, saying that, see, till the time my registration was suspended. So I am quoting this date where you made me a normal person again. I'm saying on that, from that day, I am not liable to be continuing as a registered person. That can be done.
Okay. Thank you, sir. That was a practical takeaway. I think this is where procedural understanding becomes equally important as technical knowledge. And with this, now let us move towards import of services and RCM implication. So yes, so this query concerns Foreign Travel Agent Commission and import of services under Section 13(8). The participant wishes to know Section 13(8) has not deleted. So Foreign Travel Agent Commission now taxable under RCM as import of service with effect from 1st April 2026. I am a five-star hotel and received services from foreign travel agent in March 26 and made payment in May 26 invoice. Date can be in March 26 or April 26. But in both the cases, it is within 30 days of completion of services. Do I need to deposit GST under RCM as import of service?
Okay. One thing I'm clear, it is not pertaining to scrutiny. It is a question which is current.
Yeah.
The amendment of Section 13(8)(b), which has been excluded by the current budget. The thing with the current budget is that it has become applicable from 30th of March when it got notified with respect to IGST, because there is no corresponding SGST provisions that need to be passed. So in that case, the Travel Agent Commission, I'm assuming the travel agent is outside India. So the Travel Agent Commission, what will be I calling it? Yes, it will become an import of service because the recipient's location 13(2) will get triggered. Now the 13(8)(b) does not sustain for this, or it is omitted. It will be 13(2). When we go by Section 13 subsection 2 of IGST Act, the recipient location becomes the place of supply. So the five-star hotel which is located in India, which is the recipient of such services by the foreign travel agent. So invariably, it will attract the import of services provision as envisaged in Section 2 subsection 11 of IGST. The place of supply will fall in India. The supplier is outside India. The recipient is in India. So obviously, it will attract the RCM provisions and it will become applicable, is my view.
Yes, no, definitely.
Okay. Yes. Thank you, sir. Our next query. So this is an interesting conceptual query. So what the participant has to, he asks, why does the government permit unrestricted manual editing in GSTR 3B when such flexibility can be misused to claim fake input tax credit or suppress output tax liability?
Okay, so Sapna ji, just before we proceed to this question, so on this aspect of cancellation, I mean, the suspended registration, so there was just one point that I wanted to add, which is there through the rules. So when the previous question that we were dealing with, so there is only one specific clause that I wanted to state. So what the rules in the registration rules in the rule 21, there is one specific clause which has been given which says that once the registration is suspended, the person shall cease to make any taxable supply. Now, that does not mean he should stop doing business. He should only stop doing taxable supply means one from that point of view that of course he is not going to then collect tax and pay during that particular period. So the only thing that would have otherwise hampered his ongoing business was that he couldn't call himself as a registered person or a continued registered person, and he was holding a suspended registration till then. He could have continued his business otherwise. So just that thing was not getting ticked off from my head because I said that this cannot be the way to just leave that question. So I went on to that. Sorry for that. All right. Now, see why the government permit unrestricted, as again, as Shankar sir said, that this is not really a scrutiny question per se. But there are two things that we need to see. Firstly, why do we even have GSTR 3B? GSTR 3B was just a bypass mechanism that was developed in the very early days of GST era in its GST regime in itself. GSTR 3B was never envisaged in the provisions of Section 37, 38, the 39 provisions in the CGST Act. The fact that the system couldn't take those many number of invoices, etc., was eventually leading to this formation of a kind of a shortcut method or kind of a easy to go method by mentioning simply declaring your outward liability, input tax credit correspondingly, and the net tax liability and tax payment thereof. Now, permission of unrestricted manual editing, if you say today it is on a step basis, like you have the input tax credit, if you are claiming more than what is there in 2B, it will come in the red color and then that will appear that you are claiming excess credit on the portal. On the other side, there are also scenarios where you miss out on claiming some credit in the previous period, and then you want to claim that much of input tax credit because you could manually edit it also. So although it is misused, it is misused only by the one who is doing a mischief. One. Second, it can be not really called as a misuse if it is being done by way of an error of omission. So now I'll tell you a classic practical case. In one of our clients' case, they had an input tax credit in a particular month to claim for rupees 3 lakhs. Their accountant by mistake typed it as 30 lakhs. Okay, in IGST, he typed it as 30 lakhs. They got a DRC 01C notice, and then of course extra credit, blah blah blah, everything came in. Now there was, of course, I mean, the imposition immediately goes in the eyes of the law. It becomes like, okay, there was an intent of fraud because there is no input tax. I mean, there's no purchase, then how could you have 30 lakh rupees of credit? The fact is that the only purpose of right now keeping this open is, in my humble view, is only because there will be a time when eventually GSTR 3B will also be done away with, and we'll have the normal return scenario which was originally envisaged in the GST law, that there is an automated return generated on the basis of outward supply, input tax credits, etc. But right now, if they lock in on this, there are so many suppliers who would either fail to file the GSTR1, who would not file, and maybe there are some imports which are not reflected in the 2B. So does that mean the taxpayer has to end up paying tax for that particular time, and then also end up losing on the working capital because of some of the mischief at the end of the supplier? Now, of course, now with the provisions of 16(2)AA and 16(2)C, etc., we are not in a position to claim what is not there in 2B, no doubt about it. However, there are so many scenarios where you end up claiming credit on imports because it is still not appearing on your GSTR 2B, so that there might be also a possibility. Secondly, I'll also tell you the other side of it. So let's say that my supplier has issued goods to me on 28th of a particular month. Say, let's say 28th of April, he issued me an invoice. Now, he has uploaded the invoice in the GSTR1 return file for the month of April. I am also able to see that invoice in my GSTR 2B. But the fact is that those goods started its journey to my factory on 28th of April. They reached my factory on 6th of May. So technically, I am disbarred from claiming credit for the month of April because the goods were not received by me till that point in time. For the while, I am letting go that OEM circular which was issued in the year of 2025. So technically, since the goods were not received, I was not entitled for that credit, but it was appearing in my GSTR 2B. So does that mean I end up claiming that credit as well? So the answer is no, because I am fundamentally then challenging 16(2)A provision. So as much as it can happen only on the it cannot really happen only on the positive side. You may also alter it and claim on the amount which is on the lesser side, and then what is there in 2B. As I said, if somebody wants to really misuse, you cannot really stop with the existing infrastructure. But there is a purpose that the larger business, I mean the larger segment of the taxpayers and the business, they cannot be made to made to face some crunches with their working capital just because a mechanism of tax portal is not really functioning fine. So there is a purpose that currently they will not go that stringent to limit to use the entire credit or to make any alterations on the GSTR 3B portal. So that is from my side. Shankar sir, over to you.
The wishful thinking of GST or 3B not being there and getting auto-populated, I'm also waiting since 2017 July. So let's wait and see whether that can happen. And with respect to allowing and that allowance resulting in misuse, I think that is applicable for every return. So even GSTR1, I can do that. So that way, every return is susceptible to such a risk. That cannot be the reason why the return should be stopped and everything should be made online. That will become even more complicated. Hence, I feel whatever flexibility is there, it is serving the current purpose. Maybe when things are enhanced, we will see. But if the flexibility is being misused, the legal mechanism is there in place only to check that flexibility being misused. That's all.
Yes. Thank you, sir. Thank you, both of you. So now moving to another issue which has major implications for businesses and recipients alike. Shankar sir, this question is to you. Sir, this query relates to retrospective cancellation of GST registration. The participant feels that such provisions create hardship for genuine taxpayers and may lead to excessive discretionary powers with authorities. So this is both a legal and practical issue affecting businesses significantly. So, sir, just I'll read out the query. Why is retrospective cancellation of a GST and permitted under the GST law when it can cause severe hardship to genuine taxpayers and their customers by denying input tax credit for past transactions? Does this provision confer excessive discretionary power upon tax authorities, thereby increasing the risk of arbitrary or disproportionate action, particularly in cases involving minor procedural lapses rather than deliberate tax evasion? Over to you, sir.
Yeah. So when it comes to this retrospective cancellation, it is like the domain is in the warring path, where the department is of the view that the ITC that I have taken must be curbed because it is an illegal ITC. But I am of the view that, see, I have done a genuine transaction with that person. Maybe he is a person who has done genuinely something wrong. But the transaction between the two of us is genuine. His 90% transactions could be wrong. His 10% with me is correct. So this is where identifying the correctness of our transaction becomes difficult. So what generally happens is department issues a blanket denial of my ITC. So this has been happening. Yes, I don't deny that. But now the way forward or way to come out of it, which we have recently been able to demonstrate, what we were able to do is we were able to prove to the officer that the provisions of section 75 subsection 12, which talks about self-assessment tax, when somebody accepts the liability in their GSTR1, whether they pay it or not in their GSTR3B, the liability is bounded. They are bounded by that liability. They must pay it. If they are not paying it, then only the department should look at denying my ITC. So considering this, when on appeal, when we highlighted this particular event to the officer, where we told to the commissioner that we have avoided the ITC, at that time that person was registered and doing returns. But subsequently his registration was cancelled retrospectively. So all I can do is only look at the GST portal and see whether this person has filed GSTR1. From him, the 2A would have come or 2B would have come as a proof. Second, go and see the filing table, check whether this person has filed the GSTR3B. I wouldn't even know whether he has filed GSTR3B as a nil return. Even for that, there is a recent development in the portal where I can see GSTR1 percentage versus GSTR3B tax paid percentage.
Okay.
So I'm not sure to what extent it will be useful. Be that as it may, but I can look at whether he has filed one. If he has filed one, he has accepted the liability. The recovery should be first from that person. I take the reference of this D.Y. Batal, Madras High Court Madurai bench judgment, where it was very clear. The first attempt to collect the tax should be from the erring person, not the person who is availing the ITC. So that way, I feel, yes, this will be a notice, will be maybe even be confirmed, as our chairman was saying. It will go to the next level, maybe to the appellate level. Try and reason at the appellate level as to why your claim is genuine, rather than venturing and trying to tell that the other party is a genuine person, because that may not be the case, or we may not be able to vouch for it. But the genuinity of our transaction is proved. To that extent, I feel there will be a relief. But this relief is an area of caution.
Yes, sir. Yes, Omkar sir, would you like to add something?
So only one point, I mean, to whatever sir said, just one additional point. So exactly on these same lines, there was also a judgment from the Kolkata High Court, I think in the case of Gargo traders, wherein the Honorable High Court made a specific noting that when the taxpayer has purchased certain goods from a supplier who existed in the records of the GST department as on that day when the supply took place, so he cannot be called as a non-genuine taxpayer blanketly, as rightly mentioned by sir. So although the High Court has not granted an immediate relief from the tax per se, I mean from the denial of input tax per se, but they have said that you better verify if if all these factual scenarios and metrics existed, then that ITC should not be ideally denied. So this case was referred back by the Honorable High Court. So the legislature per se and this practicality, that is now getting into a bit of conflict when it comes to such kind of a scenario, because department is also at times trying to take up some measures to take a curbing measure, which can be not necessarily limited to cause a damage only to the person who is guilty, but also in that a lot of people get painted as guilty, which should ideally not be happening. So in this case, of course, as sir very rightly mentioned, that this retrospective cancellation and the impact thereof, this can be only settled well in the eyes of the litigate, I mean, in the forums of litigation only. At the instance level of the GST officer also, even I believe that the learned officers would have a limitation in permitting a claim of this nature because they have certain other stand from the perspective of the tax default and recovery. So it's like a catch-22 situation when between the taxpayer and the department, and therefore litigation would be only the best recourse in such case.
Yes, yes. Thank you, sir. I think, sir, many professionals attending today would immediately relate to this issue. And, sir, coming forward to our next questions. Sir, this is to Gadge, sir. Sir, this question is relating to this concerns the ambulance services. While ambulance services themselves are exempt, the participant wants to know whether GST would apply when the ambulance is given on hire to another person. Sir, could you clarify the taxability position here?
So I do appreciate that the fact that the services of ambulance are exempted, but if you see the exemption notification 12 by 2017 with respect to hiring of motor vehicles, then technically the hiring of motor vehicles has been given an exemption only when it is given to any state board or state body to run any vehicle which is having a passenger capacity of 12 or more. And even in the electricity form also, if the vehicle is there in the same segment, if it is given to any local authority, then there has been an explicit exemption given. Although the end use of ambulance is exempted, but hiring of such ambulance is not anywhere mentioned as to be an exempted transaction. So in my humble view, it continues to remain taxable. On the other side also, we can try to understand one thing, that there are some ambulances which are also in the extreme passive use mode. Like if you are having an ambulance kept in your offices or in any of the factories, etc., which may not be even used for, say, a couple of years together. But if somebody has given it on hire, then that transaction in itself is an underlying transaction in itself of hiring of that vehicle will be viewed as a hiring of vehicle only, not a hiring of, that ambulance will not be taking much of a prominence in that case. So it will continue to remain taxable in my humble submission.
Okay. Yes. Shankar, sir, would you like to add something?
To hold the same view. And even this morning, we had a discussion on this matter for a different client where I was asking this question to myself: is ambulance a passenger vehicle or is ambulance a goods vehicle? But as per RTO, there are only two classifications. So it is meant to carry passengers, is what they say. So it can carry more than 13 people, is something that I can understand. But the use per se does not allow me because there are no 13 seating capacity. It might be a longer vehicle which can carry 13, but there is no seats for 13 people. Hence, I am of the view that we were discussing from an ITC angle, but from the hiring of vehicle angle, this ambulances, when they are hired, it should be looked at not as a medical services, as Omkar has rightly said. It is a separate transaction of hiring a vehicle, passenger vehicle. If that attracts the relevant RCM, it has to be paid.
Okay. Thank you, sir. So GST law often appears simple at first glance, but practical interpretation changes completely depending upon the nature of transaction. Sir, let us move to our next question, to the valuation and e-invoicing related practical issues. So this question relates to sale of second-hand cars and disclosure in e-invoices. Participant wishes to understand how to show in e-invoice sale price of second-hand car, the sale of second-hand car where the differential amount is subject to GST.
Okay, so this is a case of 8/2018. That is the notification with which they are approaching this. So I am assuming this is a car on which the ITC has not been availed, and whenever it is being sold, the differential is only to be taxed. Okay, the differential as in income tax WDV vis-a-vis the selling price.
Right.
Now, in this case, the value disclosure in the GST returns is something which we have been exploring since the day this notification was introduced, and we have found an answer, which is in GST returns. Do not look at all the softwares that are there. Just go to the portal and you look at it. You will have your answer. In the portal, taxable value will be there, tax will be there, and I can report invoice value. Had the person who designed the software or designed the GST portal thought that always invoice value will be taxable value plus tax, they would have made it an uneditable field, a normally calculated field, but that is not the case. So taxable value can be X, tax can be derived from X, but invoice value can be something else. So let me take a simple example. 12 lakhs is the price at which I'm going to sell the car, where 2 lakhs is only taxable. So how do I prepare that invoice? Taxable value is 2 lakhs. On 2 lakhs, 18% GST will come. Whereas the invoice value will be 2 lakhs plus GST of 36,000 on 2 lakhs plus 10 lakhs. So the invoice value can be for 12 lakhs and 36,000, which the portal will accept. It will not send the invoice back by saying it is not matching. It will perfectly go into the portal. So this is another reason why when we are ultimately filing the annual returns in GSTR 9 and 9C, the reconciliation that happens in 9C is only with the taxable value. So there you will find this 10 lakhs as a difference, because taxable value will only be 2 lakhs, but we would have shown the invoice value as 12 lakhs. But in the P&L, we would have done some other calculation to arrive at the profit or loss on sale. So that is why this will always be finding a place in other adjustments in 5O of GSTR 9C. One of the constants in 5O other adjustments will be this kind of adjustment. So in the monthly return, show the taxable value alone, arrive at the tax appropriately. In the invoice value, include your total that is expected from your customer. That will be the answer. Omkar, if you can add. Yeah.
No, I think sir, squarely covering everything.
So wonderfully clarified. I think all the participants had got a clarity about this. So coming to the next question. This is for Omkar sir. Yes. So once again, coming back to ISD related challenges, this participant states that non-GST income was wrongly included in turnover, resulting in incorrect distribution of ITC among branches. The participant wants to understand whether rectification is possible, whether GSTR 6 can be amended, and what consequences may arise. So I can read out the query.
I think, no, that is fine. I have read that. So see, the thing is that we'll go stepwise. One, as I said, that while distributing the ISD credit, don't focus too much on what you have included in the turnover, rather focus on what credit you are supposed to distribute. Second, that distribution has to be, as I said, that the law only says that there has to be a distribution of credit. The purpose of distribution is that since a distinct person along with another distinct person is considered or deemed to be a recipient of this service, so the quantum of receipt of service should ideally be matching, or it should ideally be matching with your distribution. That is what is the primary quest of this provision entirely. So as far as you are in a position to state that there is a destination based consumption happening in a proportion which you have devised, and in the basis of the consumption proportion that you can otherwise determine, I don't think there is need to do any kind of a reverse. Yes, I'm not saying that there is nothing like wrong distribution of credit. There is definitely something called as wrong distribution of credit or an excess distribution of credit. There is also a recovery provision given for that. But more importantly, that will be more considered necessary and applicable if what you receive from a third party invoice, and if that invoice had 18,000 rupees of credit, and if you end up distributing amount which is higher than that, then there is a problem primarily there. If you are distributing 18,000 only, what is only happening is that your registration in one state along with the ISD registration in that state is now just distributing it to the same state registration as well as the other registration. Now, second question comes in. So primarily, is there anything fundamentally wrong in the quantum of distribution? If the answer is no, let us proceed to the next step. Now, what the concern is that, okay, I had included some amount which is like a interest or something like that in determining the distribution turnover. Fair enough. Even if after that interest was taken away, after that interest has been excluded, now you are specifically doing some, dealing on the distribution. Again, as I said, first try to see turnover being a backup mode of distribution. Do you have the primary mode of distribution available from the perspective of that specific service? As I said, let us talk about if I have to distribute a advertisement design service which I had centrally procured from one agency. And if that advertisement has been published only in 4 languages which are in 4 different states, then can I also distribute in some other other way, or exactly maybe divide it by 4 and do it also? There will be nothing wrong. Can somebody be alleged? I cannot be alleged for doing something wrong. As a resort, if I am resorting to the last mode of distribution, possibly that is, I am going to the turnover based distribution. Even if I am making some changes in the turnover based distribution, what can maximum happen is that there is a rebucketing that will be required to be done. That is, my total credit is not going to change what I've distributed. Maybe to Maharashtra, I was supposed to distribute 5 lakhs. To Punjab, I was supposed to distribute 2 lakh. And to Haryana, I was supposed to distribute, let's say, 1 lakh rupees. Now, I have ended up distributing maybe 4,50,000 somewhere, 2,25,000 somewhere, and on the other side. The GST 6 amendment per se cannot really happen in this case. So what, because the amendment, what you are going to do is that you will not be changing any invoices as such. But if you want to only rectify something, then redistribution mechanism, if it is possible, only I would suggest that don't go back to the ISD. If there is only one state which has got less credit and the other state which has got credit, you may have a sort of a cross charge invoice that you can raise for support service from X to Y, if that is something which is too much of a concern that there is a wrong distribution that has happened. Otherwise, there is no need to play along a lot with this ISD return. That is what my humble suggestion would be. Shankar sir.
Okay. Shankar sir, would you like to add something?
Couldn't agree more, because ISD returns itself is only to distribute where people are complicating it beyond what is envisaged in the law. So let's not do that.
Yes, yes. Thank you so much. That was a really practical option suggested by you, sir. So next query is regarding excess ITC lying in the electronic credit ledger at head office level. Just a second. Change. Yeah. So the participant's query is excess ITC available in credit ledger. How can we refund excess ITC showing in credit ledger? Before 1st April 2025, HO had availed all ITC, that is common ITC availed in HO before 1st April 2025. They had not raised any cross charge. No liability will arise at head office, that is nil turnover, nil GST. Now they want to refund of ITC. How can head office refund or distribution of ITC among branches without cross charge? Please advise.
Again, I don't know what is the connectivity of this question to scrutiny. Still, I will give the shortest possible view on this. One, the availment of ITC at the head office before 1/4/2025 and not distributing the same is not a problem, because the provisions of 20 and 21 of CGST Act got amended and made effective from 1st of April 2025 only, which means mandatory ISD distribution came into being only from 1st April 2025. Now, what is with the ITC that has got accumulated there? There is no answer to it, because mere ITC accumulation will never be given as refund. 54 subsection 3 envisages only two situations under which refund can be given of the accumulated ITC. One, it has to be on account of your zero rated outward supplies, or it has to be due to inverted duty structure. You are not getting covered under neither of this. ITC will not be refunded.
Okay, sir. Yes, sir. Omkar sir, would you like to add?
No, so I think what very rightly Shankar sir said, that there is no question of any refund. See, there is only one thing what I could possibly understand from this question was that there is a accumulation of input tax credit that is there in the head office. Now, accumulation of credit is there, but the turnover is nil. And if that accumulation is only for the purchases which are made, which are attributed to the head office in itself, then these are purchases which are used towards the exempted outward supply. So technically, they cannot be eligible or entitled to continue to hold that credit, because there is no outward supply which is taxable. There cannot be a scheme which is devised that in one state I am having exempted supply, and therefore whatever credit is accumulating there, I'll simply pass it on to any other state of mine or any other state of mine, unless there is some underlying transaction of service happening between that state to another state of my own unit, or by way of a distinct person transaction. So there cannot be there cannot be a played around scheme where you just make something out of that scenario, that okay, the credit either hai pada hua, so just start using it to somewhere else. That cannot be a way to handle it. The ultimate thing will be that you reverse the credit and just finish it off. That is what can be done. The write-off of the credit will be the penultimate thing which can be done.
Okay. Yes, thank you, sir. So next question, coming to question number 14. Yes, so this is regarding delayed payment of reverse charge liability pertaining to financial year 24-25 during financial year 26-27 and subsequent ITC eligibility. So the participant wants to know whether the assessee can discharge the liability under reverse charge mechanism pertaining to financial year 24-25 during financial year 26-27 and thereafter avail ITC of the same in the period in which such tax is actually paid, subject to the provisions of the CGST Act 2017 and the prescribed time limits.
Now, this has always been a question that, 16 for timelines and for claiming credit, these timelines are not getting, I mean, basically 30th November, can I claim a credit after that when it pertains to RCM payment? So, practically, if you ask me too technically, my answer to this would be no, don't claim credit because you stick to the timeline which is given. But if you ask me on a practical note, what really happens in business when such kind of recoveries come and reverse charge payments are being made? There are only because of the exceptions to certain specific rules and 31(3)(f now, because 31(3)(f exists, there is still a problem. Otherwise, for RCM, there is a simple pattern observed that people claim credit as and when they pay it along with interest. They will claim the credit stating that this invoice, I mean, this being a transaction of tax claimed on the self-payment basis, so I'm entitled for the credit, and this is not disbarred from what is there in 16(4) otherwise. So that is a plain and simple way. So if you ask me, as I said, that if you ask me too technically, I'll say that technically and legally, my conscience mind tells me don't claim the credit if it is belated. However, practically, there is no end result to this. People are claiming credit. The credits are claimed only after making the payments, and that too after paying the interest thereon. In the audits which are conducted by the department, the emphasis given is pay the tax through DRC 03 challans. But in that case also, to the taxpayers, we are also trying to mention that if you are paying the tax and you want to claim credit, better go for payment through the GST 3B returns of that particular month and might as well claim that. So this is only a practical answer to this, rather than I'll not call it as a legal solution. This is only a practical solution. And legally, there is some escape and bypass available. That is the only thing I'll say, because it would not be appropriate to just, rant out against a particular provision, but this is how it is. Yes.
Yes, sir. Shankar, sir, would you like to add?
Yes, ma'am. I would want to first have a rational segregation between RCM into two types: from a registered person, from an unregistered person. Because if it is from a registered person and I am expected to pay RCM on that, it should ideally be covered by his tax invoice. So there is no question of section 31 subsection 3 clause F coming into picture, where I will be asked to raise a self invoice. Only on those scenarios where I raise the self invoice, I have a right to claim that ITC based upon the year in which I raise the self invoice. Now, this segregation itself will solve most of the problems. If the person who is giving me that RCM related services or goods happens to be a registered person, even if I pay it today, I am disentitled for input tax credit because it is restricted by 16(4). On the other hand, after November 2024, the amendment also, it only states that the invoice should be raised within 30 days. The self invoice is to be raised within 30 days. What if I do not raise within 30 days? I will be penalized. But still, whenever it is raised, it is deemed to be a valid invoice. Then on that day, I am still entitled to take input tax credit. And of course, for delaying the payment of RCM, I am liable to pay interest. That also can be taken. Hence, the ITC basically splitting into two parts and then analyzing with respect to circular number 211 is what I would suggest, and that is applicable even today, is my view. Madam, you are on mute. We are not able to hear.
Sorry. So am I audible now?
Yes.
Yeah. Yes, sir. So, coming to next question. Yeah. Sir, this query concerns purchase return transactions. The distributor had already raised debit notes and e-way bills, but later the MNC insisted upon issuance of sale invoice instead. The participant now wants to know the correction mechanism and treatment of previously generated e-way bills. So, the participant says the distributor returned goods to his seller, an MNC company, He raised the e-way on the basis of debit note through the software provided by MNC company in financial year 25-26. But in May 26, MNC denied to give back as they demanded that sale invoice was not being raised for purchase return. Distributor has from time to time raised debit note and reversed ITC. Now for same transaction, how can the distributor raise invoice? What about e-way bills raised earlier? What is the correction method? Yes,
So see,
Shankar sir.
oh, sorry.
So here I would go into two layers of this transaction. One, I have already reversed the ITC. What should I do? The e-way bill is a valid e-way bill. That I will confirm first because it is for movement. On what account the movement was done, maybe they referred a debit note and that did the movement. But the customer is expecting not a credit note to be issued from their end. Instead, the customer is saying, you give me a tax invoice so that I'll be able to take ITC based on that, rather than you reversing an ITC, which can be corrected because 25-26 transaction, any corrections I can take up subsequently before 30th November. So that way, the reversed ITC can be re-availed also. The only challenge will be if the reversal had happened in 4B1 by way of reversing it permanently, you can still claim, but there will be a query from the department saying, why did you reclaim something which you had reversed in 4B1 as a permanent credit? So that needs to be handled separately. But validity of the credit can still be told that by mistake we have reversed. And this debit note through which the goods were returned would have never been reported in any of the returns of the distributor because it is only a debit note raised in their system. So they wouldn't have reported that in their return. Now they will have to incorporate that as a tax invoice, which they will have to do. But the tax invoice would be dated today, but the movement would have happened long time back. That provision or that breach of the provisions will attract the appropriate interest and penalty also from this person, which they may have to handle. That is the minimum cost which they can get out of this transaction, is my view. Yes, sir. Omkar, you can add, sir.
Yes, sir. Would you add something, sir?
Yes, so in this case, I would only want to say that the debit note, whatever has been mentioned over here, it is as good as a nil and void paper as from the context of the GST law. Because in GST, one thing is under section 34 very clear. If it is a credit note or it is a debit note in accordance with section 34, this document can be issued only by the supplier in a particular transaction. So ideally, if the MNC would have issued a credit note and the goods were sent back under the cover of that credit note, I am talking about a GST credit note specifically, then there was no issue as such. I would have reversed the input tax credit, etc. Now here, if the thing is that if they have issued they had issued the invoice and as it mentions that distributor has from time to time raised the debit note and reversed the ITC. So technically what the distributor was supposed to do was reverse the ITC. Now if he ends up issuing an invoice, then of course it cannot be done by way of ITC reversal. He was supposed to then report it as an outward tax liability, and then the MNC could have got it as a input tax credit in his GSTR 2B. So practically, I'm just saying that, see, as sir very rightly mentioned, e-way bill, there is no problem. When the movement is happening, as long as the e-way bill is generated, there is no problem about the e-way bill default per se, because the quest is that there has to be a legitimate movement of the goods on the road under the cover of a document called as e-way bill. Now, for e-way bill, if you have prepared the e-way bill on the basis of some document for the transaction, it can be invoice, it can be credit note, it can be anything. So what exactly was the document then given at the time of issuing the e-way bill? That is also very important to understand, because this cited debit note thing cannot be considered as a valid document for moving the goods from X place to Y. That is the thing also that is necessary and relevant to understand. So if, let's say, scenario one, supplier has issued the invoice, and he has issued a credit note, then I could have ideally, in this case, the distributor could have simply reversed the ITC. The things were done there. If the supplier has issued an invoice and he doesn't issue a credit note under GST, then the only thing the recipient should be doing, ideally the distributor should be doing in this case, is issue an invoice to that supplier, to the MNC, and that will be the only appropriate way. Now, for the for the actions that he has already taken, if he has reversed the ITC, now the thing is that invoice issue karna hai, to reversal of ITC cannot be really used. So just for the sake of it, he may have to then, because he cannot have a loss in such case because he has reversed the ITC, and now if he is liable to pay output tax also, he cannot be charged to tax twice. So in that case, he may have to go a bit overboard, reclaim that input tax credit, not under those reclaim provisions I'm talking on the portal. It is a re-availment of input tax credit plainly, that against his own action of reversal earlier he will have to do, and which is of course subjected to DRC 01C and all these notices also. But the most appropriate way, if he is doing an invoice, then it would be an outward tax liability. And then पहले जो उन्होंने ITC reversal करा होगा already, that will have to be, of course, null annulled. So to that effect, he can go for a re-availment. This all will be 100% subjected to notices.
Yes, thank you, sir. Sir, the next issue relates to wrong place of supply. Yes. So, being selected in the invoice resulting in wrong tax rates being changed. So, in this case, the wrong sales invoice is issued selecting wrong place of supply. Even corresponding e-way bill and e-invoice were issued. However, after 3 to 4 days, they came to no error and they want to correct invoice. Now, what shall be correct way to correct this invoice? One is to amend directly in GST-1 or issue credit note and later issue fresh invoice, but in that fresh invoice won't be supported with physical movement of goods. So what shall be done in this case? Also, change in place in supply was leading to change in tax head. Earlier, it was wrongly issued as CGST and SGST invoice. However, it is actually an IGST invoice. Please guide on this, sir.
Swapnaji, just on a lighter note, the fact that he went along with the goods in the e-way bill in the cover of a wrong e-way bill, a wrong invoice, which had charged CGST, SGST, and he crossed the state border without getting caught. So he must be an extremely blessed person on this planet. Now, just to come on this specific question, see, it is very clear that the invoice was issued, which is a wrong invoice, and it has all the wrong contents in it. The simple solution to this would be go for a credit note and issue a fresh invoice. Of course, the fresh invoice will not have any backtracking of any movement of goods as on today, but that will have to be supported by way of a simple reconciliation. Because as technically, if you observe that e-way bill was issued, the goods did move. The fact that when e-way bill is issued and there is no immediate liability of tax that gets created because e-way bill is generated. So it did have an interstate movement. The fundamental requirement of generating an e-way bill is getting fulfilled. The details mentioned in the e-way bill are not really getting fulfilled. The physical movement will have a problem. So there you can endorse your claim by other documental evidences such as toll receipts, GRNs, etc. to prove that the goods were physically received. Because when it comes for the e-way bill scrutiny, this point will 100% pop up that the movement of the goods ideally should have terminated within Maharashtra, within that particular state only, but it has gone in another state. So how come this is a flaw? On the other side, I would also suggest that even though it sounds like a self-goal maybe, but if such and such thing happens, you issue a credit note, you issue a fresh invoice, and write a simple letter to your adjudicating authority stating the facts that so and so thing happened. We have gone for a rectification mechanism, and we have tried to do the rectification in this way. This will be only to support your in future coming litigations to say that there was a declaration of fact which was duly done by us, because there cannot be a perfect world. So we have committed a mistake, we have done some rectification action, and there is no loss which is caused to the revenue, and thus we just want to put up our facts very specifically. This is what, just as a good practice to avoid the extreme complexities in the litigation, could have been adopted. This is my solution to this. Shankar sir, over to you.
I somehow get a feeler of the erstwhile excise regime. So this is what we used to do. So all those documents where we have made some errors, we will disclose it by way of a letter to the officer at the end of the return, that is BER1, whenever it is filed, manual acknowledgement we have to take. That time we will give. I still suggest that to my clients. When the e-invoice is wrongly raised during the month, or e-way bills, any mistakes are done, e-way bills are raised but could not be cancelled within 24 hours, which remains in the portal, I've requested them to give it in the form of a letter to the jurisdictional officer. But somehow there is an apprehension in the minds of the taxpayers. Sir, why should I go and tell them that there is a problem? I have been vociferously telling them, sir, we identified the problem, we communicate to the department, it will not be 74. They will not consider that to be a culpable state of mind, mens rea case. But if they find out, come with the same query, they can always say, there is a mens rea, there is an intention to evade tax. So it is always better that you communicate. But they say, no, what if we fly under the radar? What if they don't find us? It is as good as what Omkar said. You are able to get through with that e-waybill and cross the border. You should consider yourself as a lucky person. I always keep saying this. Who is a thief? Thief is not the person who is stealing. Thief is the person who gets caught. Same way, if you are not caught, you will be happy. But why take the chance? As a rational consultant, I would tell them, please go and inform the officer that these were the e-waybills which were raised wrongly. We could not cancel. These are the e-invoices where we made mistakes, head change had happened. We are reporting that to you. This is for your records. That's all. This will solve the whole issue.
Yes, sir. So that was a very important practical clarification. So moving forward, another interesting issue regarding aggregate turnover. Yes. So yes, so I would place this question to Omkar sir. Yeah. So SSC salary is 50 lakhs and he has renting of commercial property income of 7 lakh and 1 lakh commission income. Practically aggregate turnover will include salary or not? Does SSC need to apply GST and pay GST on renting and commission income?
Oh, so see, I mean, just because we are going on this aggregate turnover definition, what the aggregate turnover definition primarily says that it is the aggregate value of all taxable supplies, excluding the value of inward supplies liable to reverse as, comma, exempt supplies, comma, export of goods or services, both on the same permanent account number to be computed on all India basis, but excludes only the taxes. Now, when you say that it includes all taxable supplies and including exempt supplies, so just for the sake of it, we'll always flow in that particular sequence. We go to the definition of what you mean by exempt supply. Exempt supply says that as per 2 subsection 47, it means supply of goods or services which attracts both which attracts nil rate of tax or which may be wholly exempt from tax under section 11 or under section 6 of the IGST Act and includes non-taxable supply. Now that periphery slightly goes beyond the borders. So when you say what is a non-taxable supply, then supplies which are not liable to tax. Now there can be two ways of looking at it from my perspective. When it is a Schedule 3 transaction, like salary being a transaction of employer-employee, services provided by employee to the employer is concerned, that is a Schedule 3 transaction. It is neither considered as supply of goods nor considered as supply of services. But in this way, all the Schedule 3 transaction also, if you take into consideration, technically even though you have some transaction in your business, so I'm just for the sake of it taking an example, that if you are having a transaction, if you are a trader and if you are having a transaction of out and out supply, you are having a business in India, but in some of the segment of your business, you buy goods from Singapore and you sell it in Taiwan. That is called as an out and out supply, which is very much covered under Schedule 3 transaction. So it is a part of your books, it is a part of your turnover. So in GSTR returns also, we are showing it as a non-taxable supply. Okay, for the purpose of reporting the turnover. I'm not saying that there is any tax or anything on that. We are only saying that for the purpose of tax, we are reporting it as a non-taxable supply. So just to take a common ground in dealing with the scenarios of Schedule 3 transaction, what it is as in this particular case, that there is a salary income of 50 lakhs, which is a non-taxable supply in isolation. It is a non-taxable supply. Secondly, there is a renting of commercial property. Now, when you say renting of commercial property, is that a non-taxable supply? The answer is no. It is definitely a taxable supply. So from the perspective of the aggregate turnover definition, it is inclusive of taxable supply as well as exempt supply. Exempt supplies include non-taxable supply. So aggregate turnover is also clicking around about 20 lakhs. So in this particular case, the 7 lakhs of commercial property rent, 1 lakh of income on the commission and practically this salary, put together the aggregate turnover exceeds 20 lakhs. So registration should have been taken in my humble submission and the tax should be paid on that 7 lakh rupees as well as 1 lakh rupees in all possibilities. This is what is my input to this.
Yes, Shankar sir, would you like to add?
I hold slightly different view. Salary is 50 lakhs. I have a methodology or a thought process that non-GST is different from not taxable. So I consider this 50 lakhs to be a non-GST, taking it under Schedule 3. So we are looking at anything other than that. If that is exceeding 20 lakhs, then only the registration requirement would come. Else, registration requirement, even that would not come. So going by that logic, we may apply that and see whether the registration is mandatory or not. in this case. So renting of commercial property is 7 lakhs and 1 lakh of commercial commission income. So totally I can see only 58 lakhs. Out of that, 50 is non-GST. So 8 lakhs does not warrant me to get registered unless I cover under section 24. So I feel we can stay away from the GST registration. If the other conditions like interstate supply not done, section 24 not attracted, they can stay away from registration. It will not get included in your aggregate turnover, is my view.
Okay.
So,
Yes,
Sapnaji, just as Umesh ji had mentioned that these are views of the speaker and not of
yes,
ICA.
exactly.
So, the participant should not feel that exactly what is happening because both the speaker
Yeah,
are at opposite end. So, with due respect to whatever sir has said, and for the sake of the participants also, that these are our own individual views. Yes, this is a disclaimer.
Yes, definitely, sir. These are individual views, and audience might have other views, or they may have other views from other different speakers as well. Yeah. So coming to next question. So this question is again a practical aspect, a technical glitch basically on the portal. So, the participant wants to know the new utility of statement of invoices is neither getting validating nor error messages popping up, and accordingly RFD 01 is not submitted. So can any of you you can guide on this?
I have been stuck with this problem for a week. We found a cheat code. Again, the disclaimer may be read very clearly here. It is only the faculty's cheat code with which we were able to overcome the Annexure B issue. What we were able to do is in the Annexure B, where earlier it was only to be uploaded as a PDF. Now it is been it is to be uploaded as a Excel-based tool given by the portal. So in the utility, we are supposed to populate all the GSTR 2B related information against which we have availed ITC for the month, match it for the period for which we are going to apply for refund, match that with the amount of ITC availed in 3B. So when uploading this clear error of what you have said, nothing is happening, screen is just saying validating or it is just uploading. This error appeared. So what we did, we just changed the 2B month, everything into the month for which we are applying the refund. So for example, if I am applying for refund for December 2025, though I know the 2B month is relating to any earlier month, I just changed it into the month of refund, that is December 2025, it got uploaded. Now all these invoices are sitting inside the portal. With respect to whether it is correct or not, I'm not disputing that it is right, but I'm saying this is the way in which we are able to upload it into the portal. And anyway, since these are the initial days of this new system, we are uploading the Annexure B in PDF in total, and there we are putting the correct 2B month as part of the Annexure B. So there is a way to circumvent this problem, which I have tried and it is working. That is what I wanted to share from my side.
Okay. Yes, Omkar sir.
So when it comes to this refund filing in the portal, as sir very rightly mentioned, the fastest way is only to use some cheat code only, that is some sort of a via media, because unfortunately the utility, the way it gets published, and it is the way the utilities are given to us, they are exactly not functioning in the full-fledged manner. So the worst case possibility is that in such scenarios, try to avoid the refunds which are going to get time barred very shortly. Because if you don't end up filing a solution, then of course that creates a problem. Or that if you're having, I mean, just I'm giving an additional solution. If let's suppose the cheat code also doesn't work, if you're not getting a response through the GSTN, please document all these errors or all these lacunas that are existing on the filing portal. This is only to understand that tomorrow when you do the filing, if the refund is getting rejected on the grounds of limitation, or it is getting disbarred because of the period of the refund being filed for, then at least these things, the screenshots, the communication made to the GSTN, the reverse communication received, etc., all these would come to your help. The other thing is that although there was one circular issued in 2025, I believe, that where they have given instances only when manual refund application is permitted. However, there is still something which is there. I mean, the rule 97 of the CGST rules will still permit for filing a refund application. I mean, for filing any document or any note, I mean, any kind of a submissions which otherwise are not being able to be made on the portal, that you could have done under the recourse of Rule 97 and manually. So there, just in the case your refunds are getting stuck by way of a limitation, and if such kind of a scenarios exist, do try to take all these cautions measures, because these would be helpful to you only at the level of the appellate when the things are going to get litigated, because the appellate authority will do give a consideration to this, that whether the taxpayer was stopped from operating that refund application, or whether the taxpayer was really prevented from with a genuine reason to file a refund application within the time. And the condonations in such scenarios would always help a taxpayer only if there is found to be some genuinity which is associated with it. So this is just an additional covering point that I wanted to give an input to. Shankar sir, anything?
No,
Okay.
sir. The perfect
Yes.
cover for my time barring is what you have addressed. Yes, to overcome that time barring problem.
Yes, sir. So moving forward to a few final set of queries. So this is okay. Yes. So is there any late fees prescribed for ITC 04? That is the question by a participant. For ITC 04, is there any late fees?
There is no late fee for ITC 04 for a fact that it is not even considered as a return in the GST portal, but it is a statement which the job worker, the person who is engaging the services of a job worker, is supposed to file. So that way, is it required? Yes, but the late fee association with this is not happening. But what we are getting to see is ITC 04 not being filed on time or not being filed is viewed as an offense under section 122(1), and thereby penalty clauses are being invoked where it has been filed. And even more dangerously, to the taxpayer, what has been seen is non-filing of ITC 04, all the job work movements are being deemed as outward supply, and that outward supply is being made taxable. That is another area that we have to be cautious about not filing ITC 04. So late fee is not there, but you may have a penalty if you file belatedly. Second, if you do not file at all, there could be a deemed supply that can come into the picture, which has already started happening. I've seen a couple of such cases in Maharashtra.
Okay. Yes. So would you like to add something, Gadgil sir?
No. So, see, the thing is that with this ITC 04, I mean, it actually at times sounds ironical to recover any additional late fees or anything with the ITC 04, because from the very beginning, any person who has tried to file an ITC 04, if I remember very correctly, that in the early days of, rather in the year 2019, this was the first time possibly when ITC 04 started getting filed officially, and thereafter there has been only an extension from time to time. So the return itself does have some, very specific lacunas, even in the formats in which the data is to be mentioned there, the quantum which is really getting covered by it, there are a lot of issues and challenges with respect to that. So as sir very rightly pointed out, there is no specific prescribed limit per se for the late fees.
Okay. Okay. So coming to the next question. A question from participant. I have been unable to file the APL 01 form due to GST glitch on GST portal within time, but it was offline submitted to the proper officer within time. I have proper evidence that the delay was due to technical default on GST portal, and after coordinating with higher authority, I have been able to file my APL 01 after 3 months of due date. The proper officer rejected the appeal without giving opportunity for being heard, that it was beyond his power. Now my issue that I am going to GST tribunal for that, convincing to first appeal to listen my case properly or present my case full flash in front of tribunal. So I think the implications and the procedures, I think the participant wants to be
Yes.
clarified.
There are two things. One is that if the taxpayer has somehow now got an order which is like an ex parte order, I'm assuming that he has rejected the appeal, or there are two things. If he has been successful enough to submit the appeal on which on which the appellate authority has given a rejection, then that rejection has come only because there was an appeal filed and which was considered by the appellate authority. That means one fact is getting established that the appeal was filed, whether manual or on through the APL 01. He has had an appeal received by him. Now, if the only issue is that there was this basic procedural lapse while filing the appeal, or I would not say a lapse or difficulty which was faced by the taxpayer, and where eventually, if the manual appeal was accepted by the appellate authority, then of course the appellate authority was in his all responsibilities specifically required to take the cognizance of the submission and then give a reasoned order to that effect. Now, if the appellate authority has rejected the appeal only on the ground of delayed filing, then and because as it has been mentioned that it was beyond his power to do so and so, that means he has definitely rejected it on the grounds of limitation. Then there are two things. Section 107 subsection 4 permits the appellate authority to condone the delay up to a period of 1 month if sufficient cause is established before him. However, owing to a recent few rulings, it has been clearly established that the appellate authority lacks the power to condone the delay beyond a period of 1 month. So that is also equivalently important to note. On the other side, if now the matter anyways is in such a scenario where you have a authority, you have an appellate order you have a OIA which is passed by the appellate authority, which may be rejected without taking into consideration the facts, but only on the grounds of limitation with all these backdrop. Then if I am taking again two stands in it. So recently there was a judgment in the case of Manjula Ben Patel versus the SGST authority before the Honorable High Court of Gujarat, where the delay was 25 days beyond the standard period of 3 months. Now that delay of 25 days was because the appellant specifically mentioned that they were confused whether to go for amnesty scheme or whether to continue with the appeal. So they couldn't make up their mind within the standard period of 3 months. So they filed it within the permissible period of 1 month and in 25 days. So the Honorable High Court has particularly taken a view that okay, this can be considered as a sufficient cause for condoning the delay within the extended period of 1 month, and ideally the authority should have done that, so have referred back the appeal and to get it re-examined from the appellate authority. If that delayed period is beyond 107 subsection 4 specifically mentioned of 1 month, then of course the tribunal will hear the matter as if it has been heard for the first time, and then of course there will be a technical argument and it will not be limited to only remanding back the case, but it will be heard as if it is a fresh case. So these are my submissions to this effect. Shankar sir, over to you.
I think especially after the August 2023 amendment, manual filing of appeal is being discouraged where it is possible to be filed online. But as you rightly said, when the earlier issue that we discussed, where I am not being able to file the refund application within the time, will I be able to give these evidences and say the attempt was made, but it was because of the portal I was not able to do? I think the same will fit in here also, where we demonstrate the possibility that we had in our hands whatever attempt that was made, but it was still not possible, could be considered as a reason, and tribunal only has the power to remand the matter back. Hence, in tribunal, yes, full-fledged it can be done, but tribunal can also take a decision that okay, this was never heard by the first appellate authority, so I am sending it back. I am condoning and I am sending it back. Can also be taken by the tribunal.
Okay, thank you, sir. So few questions which were there. So financial year 25-26 GSTR 1 versus 3B does not match, where my GSTR 1 is lesser than my GSTR 2B. This is due to IMS. How to handle same? Shankar sir.
Yeah, this is one unique situation which has arisen in this year. I'll tell you how it has happened. I will report an invoice, and then this invoice which I had reported, later on I raise a credit note. But what has happened is when I raised the credit note, I reported in GSTR 1, the invoice was accepted by my counterparty. When I reported the credit note, he has promptly rejected the credit note in IMS. So what it has done, my GSTR 1 is at a lower value, but since he has rejected the credit note, my 3B is getting populated at the full value. Both of us reconciled at a later point of time offline, away from the GST portal, that okay, credit note need not be there in place. So whatever I have paid in 3B is correct. But now there is no way I can correct my GSTR1 where I have reported the credit note. I cannot go and make changes to it or amendments to it. So that way, I think this year, 25-26, where the full-blown use of IMS is done, we will see various such issues cropping up, where the credit note is rejected, where this IMS itself is a unique kind of thing. Where credit note is rejected, my liability will increase. If the invoice is rejected, my liability will not change in 3B. If the person rejects my invoice, my liability will still not change. It will remain the same. Only when credit note is rejected by the other party, my 3B liability will increase. So this anomaly has been brought in place by IMS. Hence, when we are finalizing for this year, even from a statutory audit perspective, trying to close the GST related changes, we may see such strange cases where 1 and 3B not matching, still their return is correct.
Okay. Okay. Would you like to add, Omkar sir?
No, I think the solution is sufficient.
Okay. Yeah. GSTR 7 TDS will be compared to GSTR 1 and 3B filed by taxpayer. How this scrutiny needs to be handled?
Okay, so see, as far as this question is concerned, I always, love to first go back to the precedents of such kind of notices which are existing there from the service tax regime as on today also. So in the service tax versus TDS, there has been a lot of notices that we have been facing, that where there has been a mismatch between the TDS data under income tax and the service tax returns that you would have filed, or probably you were never registered also. Now what is happening is that GSTR 7 is a TDS which is deducted by a government or a authorized government entity, which is supposed to deduct your tax at source and report it for the purchases which are made under specific scenarios, circumstances. The problem in here is that when you are making supplies to such government entities or to the central government or state government for that matter, the month in which the transaction takes place, the invoices are issued, against which the TDS is supposed to be made by the recipient side of it, there has always been a mismatch in terms of timelines. So I may have reported a particular invoice for the month of April while filing my GSTR1 return in the month of, let's say, on 11th of May, I reported it. However, this TDS on the invoice was reported probably, let's say, somewhere in the month of July 2026. Now, what happens is that in July, there is suddenly a thing cropping up that, okay, there is an inward supply recorded in the TDS records of my recipient, but my outward supply was well before in the month of April. So and on the other side, in the month of July, I do not have any outward supply invoice which is issued to the same entity to which is deducting my tax at source. So the simple way in which the notices are issued is they take a database, they compare if there is a TDS, then there has to be an invoice, and since there is no invoice and TDS in the same month, that means there is a discrepancy. And unfortunately or fortunately, it is always the supplier who is under the challenge. They don't ever go to the recipient that there is something wrong at your end. They'll always come to the supplier that you have either short declared the turnover, or you have not declared the turnover, or you have miscalculated turnovers and the GSTR 7 data. So here the only thing is that there is a constant reconciliation that you need to prepare and keep it ready, because the invoice issued by you on a particular date, the tax paid by you, see, as long as you are issuing the invoice correctly, as long as you are paying the tax on that invoice correctly, as per the time of supply provisions, there is no real reason to worry, because then these notices are not really going to have any impact on actual liability to be paid or any kind of an interest or penalty to be paid, because that is what you have already paid. This is what we are assuming as of now, that you did not commit any fault in doing that. Just because the recipient has recorded his entries in a subsequent month or later month, that does not naturally shift my transaction to that particular month. So the time of supply will be the essence point for defending such kind of liabilities. The compliance of time of supply provisions, the compliance of provisions of issuing invoice, this will hold up key in your defense as always as a supplier. This is what is my primary submission to this. Shankar.
Agree to it. Notices will always be there because there will be a constant delay between the reporting of invoices vis-a-vis the payments. Starting with our own bank audit fees, when we would have invoiced it in April, we would be receiving the TDS would be there only in June or July. So that way, this is constantly going to be there, especially works contractors or government contractors. It is going to be even more.
Yeah.
Hence, we will have to have a reconciliation, and this reconciliation cannot be a standalone 1 year reconciliation. It has to cut across years, where this constant reconciliation is a requirement of such people who are affected by this GST TDS. We had stranger notices where government department gives an advance. They have done TDS on that. Turnover reported by this person. Now we have ended up with a notice for this person saying that why there is no turnover reported. We are saying that is an advance given for goods. So there is no liability to report it and pay tax on that also. But they are claiming, why did they then deduct? Now for them, the provisions of section 51 says whenever you pay, you do TDS. So whenever they paid, they have done the tax deduction at source. So they are not bothered about whether the supply has happened or not. So the misinterpretations and differences will always exist. A detailed reconciliation cutting across years is a solution.
Well said, sir. Absolutely, sir. Yes, coming to the next question. ITC reversal on common input tax credits, should it be reversed every month or can it be reversed at the end of the year? Is there any implication of interest on such reversal?
Okay. Can we take this as a last question for the session?
Okay.
I think we have hit the 5 o'clock mark. That is why I thought I should.
Yes, sir. We can extend till for 5-10 minutes more.
Okay. Then I think I'll take this question. Maybe you can have the next one as the last question.
Yeah.
ITC reversal on common input tax credits, Rule 42 and 43. That is the place where this is being spoken about. If I have a turnover which is utilizing or which is not liable to pay GST, but which is utilizing the input tax credits which are available for a transaction, yes, this reversal is required. Now, is it something to be done on a monthly basis? The answer is yes, we have to do it on a monthly basis, but nonetheless, as per the requirement of Rule 42 sub Rule 2, it has to be done at the end of the year also one more time. So there are 13 reversals that one has to do. Monthly reversals will be there, taking the monthly exempted turnover divided by monthly total turnover into the common such ITC as envisaged in Rule 42. And at the end of the year, the total yearly exempted turnover divided by total yearly total turnover multiplied by total yearly common ITC. So this will result in either ascertaining that we have over reversed during this 12 months or we have under reversed. If we have under reversed, the catch up has to be done. That reversal has to be done before September of the following financial year. If we have over reversed, reclaim of ITC can happen before September of the following financial year. So giving life to this provision, we will have to do this on a monthly basis. What if we don't do it on a monthly basis? We do it only annually. My personal view is interest liability will not arise, because Rule 42 sub Rule 2 clearly says interest, if there is a shortfall in reversal, shall also arise only from 1st April of the following financial year. So for 12 months, if I had not reversed, I am reversing all of it together. Let's say in May month, May 20th, if I am doing a reversal, the interest will be applicable only for 50 days, because it is only from the day following the end of the financial year. So that way, I feel the interest implication will be indifferent in terms of whether we reverse it monthly or annually. But if the quantum is higher, it is better to do it on a monthly basis rather than give our scrutiny discretion in the hands of the officer. Yes, Omkar sir, you can.
No, I think exactly the same thing. Only thing is that the Rule 42-43 reversal is something which unfortunately doesn't get taken seriously very much by the taxpayer. It is what we've often observed, because they have an inherent kind of a compulsive provision is there, that you are bound to do that reversal on a periodic basis, on the basis of the returns filed by you on every monthly basis. That on the basis of a provisional number, you may be doing it, that is fine. On the basis of the last year's turnover as a basis, you can be doing it, but there has to be some reversal that is being done. Often what happens is that people do this reversal only after a specific point in time is passed on, or maybe sometimes even after the time when they really receive some audit notices or something like that. So the best recourse is to do it on a time to time basis. Now, what is the another scenario out over here is implication on such reversal. See, practically, there are two things that are to be taken into consideration. is section 50 subsection 3 getting triggered either ways for levy of the, for the levy of interest for wrong utilization and availment and utilization? That is one thing. If there is only availment, but there is no utilization, then 50 subsection 3 may not get triggered. But the only thing is that if it was to be paid from time to time as a report, as a liability at the time of reversal, from time to time it was supposed to be reported, then they would get it, they would get a chance, or the department may get a chance to then go on imposing the interest for that period as a period liability. So this thin line of interest levy will exist, and the implications may go in the litigative route in this scenario. Yes, Sapna ma'am,
Yes,
over to you.
yes. Thank you, sir. Sir, this last question, if we could take this. What is the time limit for availing ITC for a particular financial year? Is there any exception to such time limits?
So when it
Time
comes,
limit?
yeah, please go ahead, Omkar.
No. Shankar sir, carry on.
Okay. The ITC availment for a particular financial year, 16 subsection 4, that dictates the time limit, meaning an invoice is dated in a particular financial year, the credit has to be taken in a return, which is filed on or before 30th of November of the following financial year. So the two exceptions that I see there are, one is with respect to Rule 37 and the other one is 37A. Rule 37 is to be read in cognizance with 16 subsection 2, the second explanation, which is requiring us to make the payment to the supplier within 180 days. If we do not make the payment to the supplier within 180 days, we are supposed to reverse the ITC, and if there is an utilization that had happened along with interest, and subsequently whenever the payment is made, even if it is a partial payment, whenever it is made, reclaim of ITC can be done without any time limit. The second scenario under which such reclaim can happen is where GSTR 1 has been filed by the supplier. It has appeared in my GSTR 2B. I have taken ITC based upon the GSTR 2B appearance of that invoice. But it so happened that subsequently we found that that person who has filed the GSTR 1 has never filed GSTR 3B. Then the liability arises on the hands of the person who has taken the ITC before 30th September of the following financial year. I am supposed to identify this and reverse that ITC, which I had availed on the basis of 2B. But subsequently, whenever such tax gets collected from that person, irrespective of time limit, I can reclaim the credit. So these are the only two exceptions that I can see. Rule 37 sub rule 4 and Rule 37 capital A. Scenarios where ITC can be availed without time limit, but with a very, very strong caution. It should have been availed and reversed first. Then only there can be a reclaim. Over to you, sir.
Yes, no, nothing further to add. The SC has exhaustively covered everything.
Okay, yes. So, thank you so much, sir. Thanks to both the esteemed panelists. I think today's session was beautifully demonstrated, and it has demonstrated basically that GST practice today is no longer limited to return filing alone. It requires legal understanding, procedural awareness, technological adaptability, and practical judgment as well. As Swami Vivekananda rightly said, take up one idea, make that one idea your life. And today's idea was navigating GST scrutiny with clarity and confidence. So, as we approach the conclusion of today's highly enriching session, I would like to sincerely thank our esteemed panelists, CA Shankar Narayan sir, CA Omkar Gadgir sir, for sharing such insightful practical guidance and helping participants navigate complex GST scrutiny related issues with clarity. Today's session truly reflected the spirit of professional learning and practical experience with both of our panelists. As Mahatma Gandhi said, the future depends on what we do today, and the awareness and preparedness we build today will certainly help professionals handle GST scrutiny more confidently tomorrow. I would also like to express my sincere gratitude to our chairman and vice chairman of GST and IDTC committee, CA Umesh Sharma sir, CA Rajendra Kumar P sir, for the leadership and continued support. And finally, sir, I would be least thankful if I don't mention the number of participants who had registered today. There were 700 plus participants today who joined our session. So finally, a heartfelt thanks to all the participants who joined us today across the country and made this webinar highly interactive and meaningful. And we really apologize for not taking all the queries in today's session. But thank you for being interactive and sending your queries to us. We hope today's GST Helpdesk session has added practical value to your professional journey. With this, we conclude today's webinar. Thank you, everyone. Stay compliant, stay confident, and keep learning. Have a wonderful evening.
Sapna ji, just before we wrap up, so my hearty thanks to my learned senior friend Shankar sir. It was really honor to be present when he is speaking, because he may not be knowing that a lot of people follow him, including me, when he writes something or anything. So it was really an honor. And of course to the Indirect Tax Committee, Umesh Sharma sir and RK sir. And most importantly, I would want to thank you that you've conducted the entire moderation session very beautifully. So congratulations to you too. And the only thing I would say is that if the participants have shared their questions and if they want it answered, then you can kindly check with the committee. If these questions can be passed on, we'll take out some time and maybe send the answers to it through you.
Sure. Yes, sir. I'll do that.
Yes.
Thank you from my side.
Thank
you, Sapna ma'am. Thank you, Indirect Taxes Committee, and of course, Omkar. It was a pleasure. Thank you.
Thank you, sir. Thank you so much, sir. Thank you. Thank you, Indirect Tax Committee. You will leave the meeting now.